So in this course, we are going to learn about banking. We are starting with the unit 1 where we are going to learn about mainly Banking Regulation Act 1949. So in this session today, we'll be learning banks and banking. Then what is Banking Regulation Act 1949? Its features, its objective, and also we are going to learn about the role of bankers and role of banks in economic development. So let's start with learning what is bank and how it started. So for this we have to go few centuries back to Italy, which was trade point or the main hub for the trade in for the all European countries. So the merchants from or the traders from various countries used to come to Italy to do the trading. So when they were coming at that time, they have to trade because they were coming from multiple countries. They have different currencies over there. So trading in one particular currency was a very difficult task because they were carrying their own currencies. So exchange of currency used to take place there. So they used to change their currency to the particular country's currency and then they have to trade. For that purpose, they exchange the currency sitting on a bench. So merchants used to exchange the currency sitting on a bench, and from this word bench we get our word bank. So in Italy, bench means banco, which turns to bank. So they used to sit on a bench, exchange the currency and do the trading. So technically speaking, what used to happen there? Two people came at one point and exchanged the currencies over there so that they can facilitate the trade. But then some problems started to arise. What happened? That because the people coming from different countries used to exchange the currency, so the people from the native country used to fool these merchants by giving them counterfeit money or by giving them a lesser value for the money. So to deal with all these problems now, what happened? They started looking out for a new business system where money lenders and the home brokers, they acted as the medium to trade the currency. So they used to give the currency, authenticated currency, to these merchants or to these traders, and they got the confidence of them. So from there, this medium of this home broker and the money lenders, they acted as a bank for these merchants. So this term of banking came from this place. So now we have learned what is banking. Banking is a business activity that accepts the deposits from public for the purpose and for the lending or investment. So these home brokers or these money lenders used to take the money from these merchants or traders and give it to someone who is in need. So this exchange of currency when it happening, so what happened that for someone it's a deposit of currency and for others it is a lending or it is a loan. So collection of money, collection of deposits as well as investment or deposit used to happen. So that home broker or the money lender has acted as a bank for these merchants or traders. Now let's start with how the banking system has come to India, or we can say the banking scenario in India. So before the banks came into a certain banking regulation, it used to fall under the category of Companies Act. So banks used to trade according to how the other companies used to trade. Like anyone can start a company, anyone can wind up the company, anyone wants to trade in any certain type of commodity, they can do. They can have members, partners, or they want to merge two businesses and make one or take over some other business. How companies work, bank used to work in the similar way. So what happened when bank used to work in the similar way as company, many people started opening banks because bank was a place where people will come and deposit the money. So they were getting very easy money from people, and at that time many these banks has taken the money from the public and vanished. Because of this, the government realized that no, the banks cannot fall under a certain kind of a company format. It's a different institution for a different purpose. That is where the banks, as I told, the banks function under Companies Act as a company. Then the problem started. Let's see what all problems happened. The first one, mushroom growth of banks. We have seen that how mushrooms grow one by one without any, you don't need to put a lot of investment or a lot of energy. Like a mushroom, it started growing everywhere and they started pulling money from people. So these banks, because there were so many banks, people doesn't know whom to go, where to deposit the money, and from where they can get the loan. All these problems started because there were numerous amount of banks during that time. So this was the first problem. Second, no confidence of customers, because at that time a lot of banks have started cheating the customers by taking the money and then vanishing. Okay, there were many organized banks, there were many unorganized banks started booming up during that session. So people started losing the confidence over the customer, over the banks. And these customers, instead of banks, they went to whom? They went to the sarpanch or the wealthy people of the village and put their money there instead of banks. So this was the second problem. Third one, frauds. There were so many people came up as, we are starting bank, we are going to give you more interest, your money is safe with us. With the fake promises, they have captured the money of people and they have fooled the people. The interest of people were not safe. Then poor liquidity, because at that time 1949 we are talking about. So during that time India was recently independent, and when this banks were booming at that time, India was a verge of getting independence. So we were very low at cash. We don't have a lot of money. At that time India was a poor country. So when people used to keep the money there, with the banks, and the banks used to invest in somewhere, and when these customers will come back to bank and ask and demand for their money which they have deposited, bank doesn't have money to give it to them. So liquidity was very, very fragile at that time, and people were very skeptical about if they deposit the money, are they going to get the money whenever they need it. So this was the second last one. And the last problem, no guarantee of money. There were, as we have discussed, that because of the fraud, because of numerous amount of banks functioning at that time, as well as there were people who are trying to fool customers by looting their money, people have understood that if they deposit the money with the bank, there is no guarantee they are going to get the money back. Because of these problems, the need of Banking Regulation Act came into existence. The government understood that if nothing is being done in this area, then we are not going to channelize the funds in a proper way, and we are not going to get funds for the development of our country as well as for the betterment of our people. At that time, we got our Banking Regulation Act 1949. So let's see what we have in this. So it is a primary legislation that governs the functioning, management and operation. So it controls the function, how bank is going to function. It also checks that who is operating that particular bank and how the operations are going inside a particular bank. These are monitored and controlled by this legislation under Banking Regulation Act 1949. So all the banking companies, all the banks in this country are following the guidelines given by Banking Regulation Act 1949. Any bank who is not following this will not be considered as a bank and they have to shut down. So now this is a act. Banking regulation is a act. So there has to be someone who has to see that whatever guidelines are given by this act are being followed or not. So one organization was made in charge to see that everything, whatever guidelines or whatever statutory things are given in this act are being properly followed. So who's the regulatory body of Banking Regulation Act 1949? It's our Reserve Bank of India, RBI. So all the banks in this country have to be working under the monitoring of RBI. Now, Banking Regulation Act 1949 has defined banking. We have seen a banking definition just few slides back. that what is banking? It's exchange of money and it is collected by organization and then it is lent to or invested in some other activity. But Banking Regulation Act 1949 has precised it, seeing that what is the need of our country. So they have defined the banking as the accepting for the purpose of lending or investment. They are accepting the deposits for the purpose of lending and investment from the public, which is repayable on demand. Means whenever the public or the customers are needing the money back which they have kept in the bank, it should be readily available for them to give back, or otherwise, and withdrawal by check, draft, order or otherwise. Means any way they want to withdraw the money from the bank, they are liable to get the money. So they clearly stated that the bank can accept the deposits from the public, invest or lend it to someone who is in need, but whenever there is a demand or there is a request for withdrawal of the money from the bank, the money should be readily available for them. So it has solved a lot of problem which the customers were facing when Banking Regulation Act was not there.